we acknowledge the indigenous peoples of all lands that we are on today. While we meet today on a virtual platform, we would like to acknowledge the importance of the lands which we all call home. We do this to reaffirm our commitment and responsibility to improving relationships between indigenous communities and to improving our own understanding of local indigenous peoples and their cultures. From coast to coast, we acknowledge the ancestral and unceded territory of all the Inuit, Métis, and First Nations people that call this land home. We are called to reflect and acknowledge the effect of colonialism and residential schools on indigenous families and communities, and to consider how we are and can each in our own way try to move forward in a spirit of reconciliation and collaboration. So I'm going to introduce our guest speaker today. Liz Keynes is a neurodivergent non-binary person who has had lifelong mental health related disabilities and is currently their wife's caregiver. They are currently one of the programs managers at Plan Institute, where their work involves managing Plan Institute's a free national disability planning helpline service, managing the wills, trusts, and estate planning workshops, supporting the Access RDSP program in collaboration with Disability Alliance BC and BC Aboriginal Network on Disability Society, and is assisting with the Disability Without Poverty movement wherever possible. So I take this opportunity to invite you, Liz, to continue the presentation.
Perfect. Thank you so much for that warm introduction. So yes, we are all here today to talk about financial planning for persons with disabilities, a focus on the disability tax credit and registered disability savings plan. Tekla did an absolutely fantastic land acknowledgement, so I will just add to that I am calling in today from the traditional and unceded territories of the Cayuse, Umatilla, and Walla Walla, Coquitlam, Stalo, and Katsi peoples. If you're curious to know more about what Indigenous territories, languages, nations, and treaties your home and work are on, I encourage you to start the process of learning by typing in your address at native-land.ca. So please note that today's webinar is for educational purposes only. I will not be providing specific professional advice and encourage you to consult with the relevant financial, legal, medical, or other professional before acting on the information I provide. Of course, I am here for a reason. I do know quite a lot about both of these programs, so please feel free to ask any questions that you have as we're going through. If I'm not able to answer that, I'll direct you to the right organization or resource that can. As well, another great introduction that was already done for me. So yes, my name is Liz. Outside of my work with Plan Institute, which is a national nonprofit organization, really that focuses our work on empowering people with disabilities to lead good lives. We do this by providing educational webinars and resources, publications, working on community collaboration and partnerships, as well as working on kind of the larger scale to try to enact some systemic change and advocacy as well. On a more personal note, I myself am a person with disabilities and I am my wife's caregiver. Both of us have just in the last 2 months finally been approved for our own disability tax credit status or approval. And my wife has opened up her RDSP successfully, already making contributions. And I'm hoping to get my confirmation that my account was open in the mail very soon. So definitely really excited to talk to you all about these programs today. So outside of being here on behalf of Plan Institute, I'm also here to represent our Access RDSP partnership. This is primarily a BC-based partnership. However, as you'll know, a lot of the work we do does end up going national. Really, this partnership was created in 2016 with the goal of reducing barriers to and increasing the uptake of the RDSP. As well, OCASI is committed to supporting the settlement sector to create welcoming, positive, and inclusive spaces for all. The Accessibility Initiative is a national bilingual project that aims to enhance the knowledge and skills of settlement sector professionals so that they are better equipped to support newcomers with in or visible disabilities. Through this project, Plan Institute and our Access RDSP partners were connected with OCASI, and we were able to work together to create a DTC and RDSP guide for newcomers. You will all receive a copy of this presentation and a copy of these resources after the presentation ends today. And in the presentation, the links are hyperlinked to access that. If you're having any difficulty and want those down the road, please feel free to reach out and we'll be happy to provide those to you. They're available in English and in French. So today we're going to be touching a lot about the disability tax credit. I'll probably spend around 40 minutes or so talking about the disability tax credit, and then probably around 20 or so minutes on the RDSP. Might not be exactly that, but I'll try to make sure that we have, my goal is at least 20 minutes for Q&A at the end. And we'll be touching on what is the DTC, eligibility, application process, support available. And with the RDSP, we'll be talking about eligibility, what is it, how to open one, a little bit about withdrawals and taxation, and then also support available. And then we will dive into the Q&A. I'm trying to speak at a comfortable enough pace for the interpreters to capture what I'm saying, but if for any participants, if I'm speaking too quickly as well, please feel free to send a message in the chat. And if I don't see it, please feel free, one of the back-end hosts, just go ahead and unmute yourself and interrupt me as I may not catch that. All right, so I think we're ready to dive on in to start talking about the disability tax credit. So the disability tax credit, when it was designed by the federal government as a way to try to recognize that people with disabilities have a higher cost of living and higher medical costs than somebody who is living without a disability. Some recent statistics that Disability Without Poverty has shared estimates that the cost of living for a person with a disability is anywhere between 30 to 40% higher than somebody without a disability. So this tax credit is a non-refundable tax credit, meaning it doesn't necessarily give money back to you, but it can provide a significant tax break per year. So what is it? And what is the T2201 form? So the DTC is also known as the T2201 form through the Canada Revenue Agency. Now, with the disability tax credit, as I mentioned, this is a non-refundable tax credit. What this means is that when it's income tax season, which we are currently in the throes of right now, you can apply this tax credit to your income taxes. So if in 2023, for example, you've paid taxes or you've had tax deducted or you've had tax withheld or anything like that, when you go and file your income taxes, you can apply the tax credit and potentially at that time you can get a refund. So the tax credit amount will vary every single year. For the 2023 tax year, the amount is just over $9,000. Now, if that person doesn't owe taxes, they haven't had any taxes deducted, they don't have as much benefit from that themselves, there are still other benefits and they could transfer the credit to a supporting family member. I'll explain about that in a moment. As well, for guardians and parents of children who qualify for the disability tax credit, there's also an additional disability supplement amount for children, which would be an additional $5,500 for a total of almost $15,000 in tax reduction every year. As well, the disability tax credit can be approved up until the date that up until the year that your disability first began. For example, my disability tax credit was approved going from 2008 until 2028. So went back in time quite a significant amount of years. However, because you're only allowed to have your taxes reassessed up to 10 years in the past, getting an approval for any time past those 10 years doesn't really make much of a difference. So, as I mentioned, supporting family members can benefit. We get a lot of questions about this, and unfortunately, it does have to be a family member who can qualify or who can claim the disability tax credit if you are not able to make use of that in full yourself. So, really, how that works. So really, if it's a parent, guardian, or legal representative, there's actually a section on the disability tax credit application form where you can check that you're the supporting family member, and then you can get the CRA to automatically reassess your taxes and include that tax credit. If you are a different family member, say for example, you are a child, a sibling, a grandparent, some other family member who is providing regular food, shelter, and clothing, because that's the criteria that the CRA determines that means you're a supporting family member. You have to provide a letter or request a readjustment by a T1 adjustment form. I do see somebody's hand raised. I know we have time for a Q&A at the end. Is there some technical challenges you're having, or did you need some clarification, Elizabeth? Oh, you're muted.
I wanted to know how I can find out when the DTC started. On every 5 years we renew it, but I don't know actually when it started, many years ago. Who could tell me that? Because I need that info, don't I, to do an RDSP?
Yeah, well, it's helpful to know that you have it approved and how long it goes to. As long as the DTC is currently approved, you can open the RDSP. It's not mandatory to show proof of the disability tax credit when opening an RDSP, although we do know some financial institutions request that. But regardless, it can be helpful to know how to, what years you're eligible for it for, or what your son is. And so what I would suggest is either going on to his My CRA account online, but if you don't have access to that, then you can actually just call the CRA. And a little bit later in the presentation, I do have the CRA's phone number, so I'll make sure to point that out when it's on the screen.
Okay, thank you.
Okay, great. All right, so now outside of those tax benefits that we have of the disability tax credit, which again, for some folks, not at all important, don't have to pay taxes, no taxes are deducted, you have no supporting family member who can claim it on your behalf, who is in a different situation. But the DTC is what I like to call a gateway benefit. So once you have the disability tax credit, it opens the door for other benefits. So one of which is the RDSP, which the second half of this presentation we'll talk about. But outside of that, it also provides some additional benefits. So I'm not going to mention all that are on the slide here, but something like the Canada Workers Benefit Disability Supplement, which is a money in your pocket. I believe the maximum is around $700 per year if you're somebody who's low to middle income in Canada who is working and qualifies. As well, there's a child disability benefit. So for children, or I guess for parents and guardians who are currently receiving the Canada Child Benefit, there is the Child Disability Benefit, which is an additional amount per month that you would receive if your child qualifies. And this is automatically factored in once that DTC is approved and can be backdated as well. I believe it's around $200 per month extra that you can get per child who qualifies. And then other things like being able to claim extra medical expenses, being able to get a qualified disability trust status, and different things like that. And finally, another benefit of the DTC is that we do know that sometimes other federal benefits are tied to the DTC. So many of you may remember that in 2020, Canada provided a Canadian Emergency Relief Benefit, or the CERB, for people in Canada who were unable to work due to the pandemic. Now, unfortunately, a lot of folks with disabilities weren't actually eligible to claim that because they weren't working before the pandemic happened and didn't meet that criteria. So as one small way of the government recognizing that, what they did is they provided a one-time $600 payment to all people who qualified for the disability tax credit in Canada by December 31st of 2020. Now, we're not sure if anything like that will come again, but with the new Canada Disability Benefit having received royal assent in the summer, for those of you who don't know what that is, really that's a benefit that was, announced in the 2020 or 2021 throne speech. It did receive royal assent in the summer. The goal of this benefit is to top up pre-existing provincial or territorial income assistance programs, so that you're not living below the poverty line if you have to rely solely on that income assistance. We do feel that the DTC approval is going to be one of the eligibility criteria that they'll first have in order for folks to get that benefit. So even if none of the other benefits are relevant for you, getting the disability tax credit can be extremely beneficial. Now, who is eligible for the disability tax credit now that we've got a better understanding of what it is and what it gives you access to? Well, the DTC has no age restrictions. This is one of the best parts about the disability tax credit, as well as it having nothing to do with whether somebody can work, go to school, and also doesn't depend on their income or assets. What this means is that somebody could be earning $5 million a year. They can still be approved for the disability tax credit if they meet the other criteria. They could be 1 or 2 years old and their parents can apply for the DTC on their behalf. Somebody could be in their 90s and get the DTC. So quite expansive that way. As well, the DTC is not directly connected to your diagnosis. It is not enough, as a general rule, to put just your diagnosis when completing the application form. There are some exceptions to that rule. So for example, in the last few years, they've changed it so that people who have insulin-dependent diabetes, they automatically qualify for the disability tax credit under the life-sustaining therapy section. I'll explain more about that in a few moments. As well, somebody who is diagnosed with Down syndrome, that's also another condition that automatically qualifies. But outside of those, I don't have other readily available examples. There may be other conditions that get automatic approval based on diagnosis, but for the most part, it's not tied to that. So really making sure that you provide a lot of examples about how your disability impacts you on a daily basis. So the disability tax credit is going to look at a few different things. It's going to look at whether you have a severe, prolonged impairment that lasts substantially all the time, or we can think of this as, generally about 90% of the time you'll experience these impairments. Now, you can qualify if you have physical health conditions and mental health conditions, either or, and a combination of the two. So it is quite expansive, and I'll get into each of those different areas now. So the first one is prolonged. Prolonged is probably the easiest to understand. So prolonged means that the impairment has lasted or will last at least 1 year. So for example, the earliest most folks can apply for the disability tax credit would be a parent or guardian who is applying for their child, generally around age 1 or 2, because at that point the disability has already lasted at least 1 year. However, if that child is born and it's very clear that they automatically qualify, like let's say, for example, a child is born and they have complete blindness, perhaps they are a quadriplegic, or perhaps they have something else that's really obviously identifiable as something that is long-term and probably permanent. At that point, they could actually apply before that baby is even 1 year old. But for the most part, people will apply later on. And because the DTC goes back in time to the date the disability started, as long as you're applying, if you're a parent or guardian for your child before they're the age of 11, then you would still get all of those benefits for those previous years that you had previously missed out on. Now, substantially all the time, as I mentioned, that means that the impairment is present all or almost all the time, which is generally at least 90%. And that'll show up in different ways depending on the sections of the disability tax credit application form. So now to really get into the, bulk of the DTC application form, what is considered a severe impairment? So the CRA has provided a few different ways that people can qualify for the DTC. The first is if they have what's called a marked restriction. Now, if somebody has a marked restriction, that means that in one of the activities of daily that in one of the activities of daily living, which I'll mention in the next slide, so they must be very restricted in one of those activities of daily living. This means that they either cannot do that activity, they need a significant amount of help to do that activity, or it takes them significantly longer than somebody the same age as them to do that activity, usually about 3 times as long. So for example, if somebody else your age would take 10 minutes for a shower, but you have to take 30 minutes because of your condition, that could be considered a marked restriction. As well, let's say that you are restricted a little bit less. Maybe you're not getting that 3 times as long with just that one activity of daily living. That's okay. You could still qualify under the cumulative effects of impairment. This is when you are restricted a little bit less, but in 2 or more of the activities of daily living. So that combined effect is equal to a marked restriction. And then finally, the last category we have is life-sustaining therapy. So that would be somebody who is in need of therapy that keeps them alive and that takes up a lot of time. They've recently changed this, so now you must be receiving this therapy at least 2 days per week for a total of about 14 hours. And I'll elaborate on that in a little bit. So here are those basic activities of daily living that I was mentioning. So these are all the different categories that somebody could qualify under. So their vision, speaking, eating and making food. So with this, it does include challenges with preparing food. For example, if somebody was unable to stand at the counter or the stovetop to cook for a long amount of time. Also looking at hearing, walking, eliminating, which is using the toilet, dressing, and mental functions for necessary life. Now, each of these sections have different medical practitioners that can verify those sections, and I'll touch on that in a little bit. So each of the sections will have at least 1 page on the application form for you to complete. When you're completing that application with your medical practitioner, any sections that don't apply to you, you can just leave out. You don't have to worry about completing them or including them with your application because it's irrelevant to you. And some sections have more than 1 page. For example, the mental functions section that has 3 pages. And I do have an example going through that a little bit later. So how do you apply? Let's say you are getting this information and you think, you know what, I actually think I might qualify, or maybe you're a support person for somebody else. What are the next steps? Well, in the last few years, the CRA has made some changes. So now there are 2 ways that you can actually apply for the disability tax credit. So the first way is the standard way that will hopefully always be around, and this is through the paper application form. I believe I've attached a copy of the most recent application form as the resources to be shared out with participants today, but if not, you could also do an online search of DTC application form. Just make sure that if you're doing it that way, that you make sure that you're looking at the actual Government of Canada website, because that will definitely have the most updated form. Also, you can always reach out to our organization. We'd be happy to mail you a copy of that. Once you have the paper application form, it's good to book an appointment with your medical practitioner to go over that form. Now, even if your medical practitioner says, oh, it's fine, just give me the form, I'll fill it out on my own time, highly encourage you to advocate and say, you know what, I understand that you're busy, but I would really feel more comfortable if we could sit down and have an appointment together to go through it. There is usually a fee to complete the application form. I think it's capped at $200, and your doctor or medical practitioner might be willing to waive that cost. But if not, get in touch with us and we can try to help advocate for you, because I understand that $200 can be quite a massive barrier. Even $30 can be a big barrier to getting this completed. So hopefully your medical practitioner is like, yes, no problem, I will go ahead and book an appointment with you. Great. You complete part A of the form. That's just 1 and a bit pages, really. It's your personal tax information like name, address, social insurance number, the supporting family member, if again, it's a parent, guardian, or legal representative who's going to be claiming the disability tax credit. There's information on there to put down, what years they've been supporting you with food, shelter, and or clothing, and space for you to write in that information. As well, there's also a spot on the back if you are a legal representative to put your information and say that you've completed the form on this person's behalf. Then it's up to the medical practitioner to complete the rest of the form. And once the application form is complete, definitely keep copies of that application. That's really important, because if you are approved, you'll know what was included in that application that got you approved, and you can include that in future applications if you have to reapply. And also, if it's declined, that's a good way for you to work with an advocate and start to look at, okay, well, why was I declined and what can I do differently? Or, what information was missing that I can add now? So once you got your copy of that, it's all completed. You can submit it either through your My CRA account online. There is I believe there's a way, I can't remember, I did it myself online, but it would be under the benefits and credits section, and you can apply right there. And there's also a submit documents section. That could even be where it was, but submit it online. Outside of that, you can also mail it in to your closest tax center. So I believe for folks in Ontario, that would be the Sudbury Tax Center. For folks that are like me in British Columbia, it would be the Winnipeg Tax Center. Now, there is also the new digital application forms. So pretty much the exact same process. It's just a different way of submitting that application. So if your medical practitioner wants to submit the application digitally, they'll require a reference number. Now, the reference number is something that you would receive once you complete Part A online. It actually is really easy to do online if you have access to your account. You may need a support person if you have trouble navigating that, but I say that it's easy because it already auto-populates the application with the information the CRA already has for you. So it'll put in your address, name, social insurance number. If you have any dependents, like if you're a parent or guardian applying for a dependent, that'll all be there for you. So a little bit less work in that vein. If you aren't able to access your My CRA account, you can also call the CRA and complete Part A over the phone. And then the agent you speak to, they'll be able to get you a reference code that then you can bring to your doctor. And then your doctor, same thing. They can go online. They have a separate portal and they'll just put that reference number. A little bit faster for them, I think. That's one of the perks of the digital application, because there's a lot of like tick boxes and auto-generated answers where they just have to kind of choose a multiple choice answer. But again, still encourage you to have an appointment to go through that with your doctor, because even if your doctor feels like they know you, unless you're having a conversation and able to talk about it, they may not have a really good understanding of every single way that your impairment impacts you on a daily basis. And so having that appointment is a good way to make sure that you are on the same page and that you have the best chance of getting approved because you're providing that detailed information. And I would suggest trying to book the appointment for an hour, maybe 30 minutes if you have already kind of pre-filled that application, just based on your own understanding and experience, or if you've worked with an advocate to do that. And then the doctor can either, or medical practitioner can submit directly online, or they can save it as a PDF, print you out that PDF, and then you could submit it the same way as a paper application. So as I mentioned, different medical practitioners can fill out different sections of the form. So currently, medical doctors, which does include psychiatrists and nurse practitioners, are the only medical practitioners that can complete all sections of the form. Every other practitioner can only affirm sections that are relevant to their profession. So for example, an optometrist can fill out vision, an audiologist can fill out hearing, a speech language pathologist can fill out the speaking, and a psychologist can do the mental functions necessary for daily life. There is no preferred medical practitioner to complete the form. Really, I would suggest if you're working with multiple, that you would be working with the medical practitioner who knows you and your situation the best, because that's going to give you the highest chance of getting approved. You can have multiple medical practitioners fill out the application form and sign off on their relevant sections. Like, let's say, for example, you've got an audiologist and a physiotherapist and a speech language pathologist, but you've recently lost your medical doctor. That is possible to do. The only challenge with that is you want to make sure that there's no contradictory information from those different doctors, because that could lead to a possible declined status of your application, or it could lead to more follow-up questions because it's a bit unclear. So definitely just wanting to make sure it's as cohesive as possible. And when you're going through each section of those forms, each section is going to ask section-specific questions to get a good understanding. It is the CRA that determines your eligibility, not your medical practitioner. I know a lot of folks will reach out and they'll say that their medical practitioner isn't willing to fill out the form because they say, oh, you know what, you have a job, you're not disabled enough. No, this is for people who have no use of any of their limbs and are completely blind and need 24/7 care. There's a lot of misconceptions that are out there about the application form, but it might help just to remind and reassure them that that's okay. It's all right if you don't think I'm going to be approved for this, but it's actually the CRA that makes that determination. All I need you to do is work with me to fill this out accurately, truthfully, and to the best of our mutual understanding about my conditions, and then go from there. Doesn't always work. Sometimes you might need to hire or pay for a private assessment, depending on what sections you qualify under. But just as a reminder too, it's the CRA, which is also why it's good to provide as much information as possible in the application, because they're CRA agents. They're not medical practitioners who are vetting these. And so they really need as much information as possible to help them make a correct decision. So each section is going to ask things like, do you take any medication? If you do, how effective is that medication? Do you use any medical devices or therapies? If yes, which ones? It'll also ask about the severity of your symptoms from a 5-point scale from mild to severe. It'll also ask your about the frequency, so rarely to always, also a 5-point scale. For folks who might qualify under the cumulative effects of impairment, on the paper form, there is a separate section that has to be filled out, but on the new digital application, that's automatically factored in. So that's just one of the kind of key differences about those application form styles. So as an example, under the mental functions category, as I mentioned, there are 3 pages, and this is actually the category that I qualified under for the disability tax credit, and my wife as well. My wife would probably qualify under cumulative effects of impairment, but her nurse practitioner unfortunately hasn't been willing to certify the other sections because she has a rare condition that this is still not diagnosed after almost 5 years. And he believes that a diagnosis is more likely to get approved. So we actually hired, or again, paid for a private psychologist assessment. And so she was approved under this section as well. So very familiar with this one. So the kind of the subcategories that we have under mental functions are adaptive functioning, attention, concentration, goal setting, judgment, memory, perception of reality, problem solving, regulation of behavior and emotions, and verbal and nonverbal comprehension. Now, under each of those categories, there's a few other like specific areas under each of those that they'll mark you on, and it'll ask you whether you have no limitations, some limitations, or very limited capacity for each of those. And each category does have an other section where you can provide specific examples about that. Now, for children who are under 18, it's a little bit interesting because a lot of those areas of daily living, they wouldn't necessarily be responsible for doing themselves anyways. So when looking at applying for a child, you really need to look at, you know, how does this child compare to same aged peers? You know, for example, look at is there adult supervision at home that's required beyond an age appropriate level? Is there additional support needed from educational staff at school? You know, is the child expected to meet the same milestones as their same aged peers? Can they express specific needs? All those types of questions that really look at how they're adapting and how they're functioning compared to others their same age. And I think the CRA really looks at that kind of for all sections and people of all ages is, you know, how do you compare to other people your age who don't have that disability or impairment, and being able to look at it that way. So that third category that I mentioned is life-sustaining therapy. So this one can be its own category that folks would qualify under. If you don't meet the criteria for life-sustaining therapy, perhaps you might still qualify as a marked restriction or with a cumulative effects of impairment. So life-sustaining therapy is when you need therapy, as I mentioned, that supports a vital function at least twice per week at an average of 14 hours a week. So some examples of this would be if you need insulin therapy for diabetes, kidney dialysis, if you require oxygen therapy. Now, not all activities are included in this 14 hours, however, even if it is part of getting that treatment. So for example, traveling to and from the appointment, you can't factor that in. Doesn't usually include exercising or going to the actual medical appointment to plan for that treatment. Or you know, the process of buying medication. However, I believe they've recently changed it. So now recuperation after therapy, so recovery time, can be included in that time, but you basically need to have a little bit of a prescription for that to make sure that it is qualified. You can't just, you know, pull out a number and say, oh, it takes me, you know, 15 hours to don't know how long it would typically be after different therapies, but that's how you would factor that in. So even though you are not the one who's filling out the application form, it can be, again, really helpful to fill it out on your own, just so you have a better understanding of like where you might qualify and be better prepared to advocate for yourself in your medical practitioner appointment. For example, my psychologist had me fill out the form myself. We had an hour-long appointment, reviewed all sections of the form, made sure that we had a good understanding. She asked any questions that I didn't that she needed to know. And then she completed the application brand new digitally, just using my paper version as reference. And so it wasn't an exact duplicate based on her professional experience of working with me. Some sections were increased in restrictions, some were lessened in restrictions, providing those examples in there. But some things that you'll definitely want to make sure that your medical practitioner includes are some key phrases. Again, CRA, not a doctor who's looking at these. So things that they would want to include would be wording like substantially all the time, requires assistance, unable to manage activity, takes 3 or 2 times as long to complete the activity, and not expected to reach milestones of same age peers. Now, as I mentioned at the beginning, the DTC eligibility doesn't matter whether you can work, go to school, how old you are, how much money you make. So don't include information about those things. Don't include information about your ability to work, housekeep, manage a bank account, drive, or do recreational activities, because the CRA doesn't care about that. And if you include information, it may seem to contradict other information, and it could lead to more questions or potentially a decline status, depending on what you're putting in there. So I want to mention here, just before I go into submitting the application and next steps, about some helpful tips in the DTC tool. So if you're somebody who's living in British Columbia, or you're supporting somebody in British Columbia, advocates at DABC and BCANS can assist with applications. They book appointments with an advocate, usually 2 to 3 months in advance, because these services are in extremely high demand Canada-wide. Have that appointment, go through all sections of the form, ask some questions about different ways people have qualified under there before, create a sample application that you can take to your medical practitioner. If they agree with it, they can just sign off on it, or they can just use that as a reference point and for that conversation. However, for folks in other provinces and territories, which I'm guessing probably the majority of you are, you can call Plan Institute's free disability planning helpline service. You can call us at 1-844 311-7526, or you can email us at info@rdsp.com to either get some help directly from one of our DTC expert advisors, or to be connected with a local advocate who can do that more comprehensive support with you. Not all provinces and territories have free supports available, so reaching out to us can be a good way of trying to find that information out. As well, if you're somebody who doesn't necessarily need that much support, you just want a little bit of extra guidance and care, DABC has a free app that can help. Basically, what you do is you go through, kind of as you would with an advocate. It's an online tool. You go through a questionnaire, goes through all the questions, how you might qualify, and then it comes up with a printout. Excuse me. It comes out with a printout or a PDF that you can actually just email to your medical practitioner. And to access that, you can go to disabilityalliancebc.org/DTC-app. You could also do an online search for DABC DTC tool, and that should get you there as well. So once you're ready to submit the application, as I mentioned, you can submit it one of 2 ways, either online through your MyCRA account or to the nearest tax center to you. The back of the application form does tell you all the tax centers and that it's the closest one. I put the Winnipeg Tax Center. That would be for folks who are anywhere from BC to Manitoba. But for folks who are in Ontario and further east, it would likely be one of the Ontario or Quebec tax centers. So after you have applied for the DTC, it does take time. Usually I would say average 3 to 4 months. I think the fastest I've heard of a DTC approval taking place was 1 month, but I'm guessing that was probably in a quieter time at the CRA. So if you are applying now, it might be extended a little bit because it's tax season. Basically, once the CRA makes their decision, you'll be notified. If you signed up to receive electronic communications, you'll get an email that says notice of determination is available. If you haven't, then you'll get a mailed notice of determination. As well, you can always check your status on your My CRA account online. And of course, if you are not able to access any of that, you're not getting any information, it's been 3.5, 4 months, you're still waiting, then I would suggest calling into the CRA as early as possible in the day, because I know that sometimes they actually close their phone lines halfway through the day if they're really busy and have a lot of callbacks to make. So that number for DTC applications is 1-800-959-8281. So that's a good place to check your status, to find out how long you've been approved for the DTC for, and any other questions that you may have. So after an application has been submitted and the CRA, then the CRA can do one of three things. So the first thing that they could do is provide an additional questionnaire. So again, this is if there's maybe some contradictory information in your application, or maybe it's a bit sparse and you didn't actually put that many examples in there. So in that instance, the CRA might send a follow-up questionnaire to that medical practitioner. If that happens, the applicant is rarely notified. I don't think they're ever actually notified directly. So it may be good just to ask your medical practitioner, hey, if you get a follow-up questionnaire from the CRA, can you give me a heads up? Because that will likely extend the time frame for a final decision about that. And with that questionnaire, they're not looking for new information. They're just looking to validate the information that you've already provided in that application. Now, after that's been done, the CRA can either approve your application, woohoo, or they can decline it, which can be discouraging. So if you're approved, wonderful. I know that can be quite an uphill battle. For me, it was thankfully fairly easy because I've been working with the same psychologist since 2020, and she knows me really well, and has been really supportive and, knows me very well. So it wasn't any problem for me to get her to do it. And she actually waived the fee. So I didn't have any cost to do that. As I mentioned with my wife, she's had quite a lot of issues. Even though she's always had lifelong mental health issues, she didn't have a primary care doctor for quite some time. She was passed around from doctor to nurse practitioner to another doctor to a stand-in doctor to no doctor to wait list, until she was finally connected with her current nurse practitioner. But even with that, we were experiencing barriers along the way. Through that time, her health continued to get worse. She's had 2 major surgeries, one that she's still recovering from. So it was a bit less of a priority, but my psychologist actually recommended a colleague who we got that private assessment from. So that was fantastic. But because the medical practitioner that filled out my wife's form, they didn't know her quite as well and didn't have as much information, her approval only went from 2023 to 2028, whereas mine went back to 2008. Now, we might go and try to appeal that, might submit a new application with her nurse practitioner now that she's already been approved for it, just to try to get the backdated years. But if you are approved, it'll usually be for a set number of years. So generally, I think you see approvals for 5 or 10 years into the future. Even sometimes for people who have permanent or lifelong disabilities, you may still be required to reapply. If, however, you do get that status back and it says you're approved, but for only 5 years, but you're completely blind and have no ability to see, or let's say you have something like degenerative schizophrenia or early onset dementia, different things like that, that if your doctor can say, you know what, this is not going to go away, this is probably going to get worse, you can actually try to appeal that decision with the CRA and ask them to request to reconsider that application approval years. Often it helps to have your medical practitioner write that letter requesting that, based on my professional experience, I don't think that this should be that it should be for 5 years. I think this should be indefinite. And sometimes you will automatically be approved for all future years. For parents and guardians who might be on the call for minor children, For the most part, once that child is 18, they will be required to apply for the DTC again as an adult. Really, this is because they're going to be applying it to their own taxes. So even if they do have a permanent disability, that's usually one of the times that they would be required to. And then hopefully when they apply again, that one would be for indefinite. If you are denied the disability tax credit, it doesn't necessarily mean that you or the person you're supporting does not qualify. Oftentimes, people get declined because there wasn't enough information that was included in the application, or there was incorrect information that was put in the application, or maybe it just was, maybe there was one section that was filled out, but actually you don't have enough restrictions to have just one category, but you do have impairments in multiple. So if you are denied, you have a few options. You can add information. For the most part, it's good to work with an advocate at this stage just to review your application and see what else might be needed. So you can add more information, and then that is often enough to change it from denied to approved. If you can also submit a new application form altogether. You don't have to just add on to the one you already submitted. You can do one completely fresh. If, however, you've done those things or the application you submitted is actually fully complete, you're extremely confused why it was denied, working with an advocate, you see, actually, I don't understand why the CRA denied this, you can request a formal objection. I believe it goes to the Chief of Appeals first, and then it would go to tax court. Could be reversed. But again, if you get to that stage, please feel free to reach out to our helpline, and we're happy to support you through that. But hopefully with all this information and all the help sheets and resources, it'll set you on the road to success for that. So now going to switch gears to talk about the Registered Disability Savings Plan. Don't worry, this section is not as long as the DTC section. So as I mentioned earlier, people who are approved for the disability tax credit can open an RDSP. But what is the RDSP? I'm sure many of you have heard about it. Maybe you know a lot about it, maybe you know a little. So hoping to help demystify some of the most common questions we get about the RDSP. So the RDSP was created in 2008 after many years of lobbying from different organizations. Plan Institute, the one that I work with, was one of those that was championing the development. And really the leaders of that movement were primarily parents and grandparents and guardians of their adult children who, at that time, by the 90s, early 2000s, we were realizing that they were starting to outlive their parents. And so there was this big question of, okay, well, how do we ensure that my kids are going to have a good life even once I pass away, knowing that so many disability benefits that exist are really prohibitive in the amount of money that somebody is allowed to save and the money they're allowed to earn if they qualify for it. So the RDSP was created as a long-term investment savings plan to act kind of like a pension replacement. Now, one of the best parts about the RDSP is that it is 100% federally exempt. That means for any federal benefits, things like the guaranteed income supplement and old age security, those do not factor in the RDSP in their calculations of your income and assets. Most provinces and territories have also exempted the RDSP. I think there's only three provinces that have it only partially exempt. So you'll just want to double check. If you do have specific questions, I can look it up and get back to you after the workshop today. But for the most part, the provinces and territories have exempted it while the money is in the RDSP and even once the money is taken out of the RDSP. So for example, folks who might be receiving BC's Persons with Disabilities Income Assistance, or people who might be receiving the Ontario Disability Supports Program, those programs consider the RDSP fully exempt even once that money is taken out, so can be a really great way to save. Now, outside of the exempt asset part of it, which is incredible, you can deposit up to $200,000 in personal contributions. And the government can contribute up to $90,000 in grants and bonds. I'll explain those more in a few moments. So really, if you're looking at being able to maximize that full amount of the plan, so that could be potentially $290,000 plus investment income. By the time it's, by the time you're ready to take withdrawals, you could have several $100,000 in savings. I recently, I think it was last year or the year before, I was supporting somebody through our helpline, and they were in their 50s. They had deposited the full $200,000 lifetime personal contribution limit because they had received an inheritance. And by the time they were ready to start taking withdrawals at age 60, the investments that they had chosen had grown to the point where they had $500,000 in their RDSP just from their $200,000 contribution. So it can be a really amazing tool to use that can support financial empowerment and well-being. Now, to qualify for the RDSP, you must be a Canadian resident. Now, similar to the disability tax credit, this just means that you're a resident for tax filing purposes. So you don't have to be a permanent resident or a Canadian citizen. As long as you're required to file and pay taxes in Canada, you can apply for the DTC and you can be eligible for the RDSP. You must also have a valid social insurance number. So it can be temporary or permanent. It just has to be and remain valid. As well, there's two terms that I just want to clarify quickly. So the beneficiary, that's the person with the disability who qualifies for the disability tax credit and will receive the money that's in the RDSP. There's also another term, which is the holder. Now, the holder is the person that's going to be responsible for managing the RDSP, working with the financial institutions, choosing and approving investments, and making sure everything is running smoothly. And those two people might be different. So both the beneficiary and the holder must have a valid social insurance number. And of course, the beneficiary has to be approved for the disability tax credit. And there is some age criteria with the RDSP. So folks are able to open the RDSP up until December 31st of the year in which they turn 59. So they start the year at 58, end the year at 59. That's the last year that they can open the RDSP. But those government grants and bonds that I will touch on and elaborate on in a few moments, those can only be received up until December 31st of the calendar year that the beneficiary turns 49. So there is unfortunately no possibility of getting grants and bonds past that age. So that is the last year. And so if there's one message that you can take away is just to start as early as possible to try to get as much of that money as possible. Now, who can set up an RDSP? So as I mentioned, this is what would be the holder. So when figuring out who's going to be the holder of this account, you have to look at two different things. One would be the age of the beneficiary, and the second thing is contractual competency. So for a minor, so this would be in your province or territory, the age of minority. If you're setting up an RDSP for a minor, then it has to be their parent or guardian that is the holder. If, however, the RDSP is being opened for a beneficiary who is already an adult, then we look at contractual competency. And contractual competency really is just somebody's ability to understand what a contract includes, be able to know what consequences there might be if somebody wasn't able to meet the terms in that contract, and be able to sign off on that contract. So this is really determined by the financial professional that you're working with to open up the RDSP. And then depending on the contractual competency, there's a few different options. So for a beneficiary who has full contractual competency, so let's say they manage all of their own bank accounts, they have no challenges in doing that, generally they would be the ones who are the holder of their own RDSP. If their contractual competency is what they call in question, meaning maybe they can manage their bank account, but they need some support with it. Maybe they have cyclical conditions where sometimes they aren't able to manage a bank account, or maybe they have brain fog and aren't able to comprehend numbers and words or things like that. In those situations where it's a little bit less clear, it's just in question, then it can be a qualified family member who can be the holder. This was recently changed in I believe it was July. So now a qualified family member can be a parent, a spouse, a common law partner, or an adult sibling of the beneficiary. It does have to be a biological sibling of that beneficiary. So unfortunately, step siblings don't count for that. And then finally, if there's no contractual competency, let's say they will never be able to manage their own bank account, at that point, it has to be their legal guardian. For the RDSP, depending on where you live, guardianship, which is a formal process of basically having full control over someone's decision making, that's usually the most extreme form of guardianship, but not everyone needs to go through that. For example, in British Columbia, we have the representation agreement, which is a way for somebody who, as long as they can, understand and know who they trust and want to make decisions for them, they don't need to have the full legal capacity to make something like a power of attorney. So those are just some considerations there. And there are other supported decision-making acts in other provinces and territories, but I'm a little bit less clear on those. And just briefly, if somebody is transitioning from child to adult beneficiary, so let's say you're the parent or guardian of a minor who, becomes of age, as, a lot of folks do. At that point, then, if you were the parent of that beneficiary, you can stay on it as the holder when they become legal age. However, if you're just a legal guardian, potentially you are even an institution like the public guardian trustee, or maybe, or another member who just has some guardian over them. At that point, they have to be removed as holder, and then we go through that same flow of contractual competency and the options available there. So once you have met all the criteria, you're ready to go ahead and open an RDSP. That's usually a fairly straightforward process for the most part. At this point, almost every financial institution does offer the RDSP. This includes banks, credit unions, independent financial services companies like Primerica, Edward Jones, Sun Life, Investia. There's many that are out there, brokerage firms. So really, there's quite a large variety. The main differences in terms of how the RDSP will work. So the rules that I'm telling you about now, all financial institutions have to abide by those rules. So there, is a lot of standardization about how the plan works. Really, the main differences would be in terms of, ability to connect with somebody. For big banks, generally, there's just one designated call center. You'll never be able to see somebody face-to-face in person to open the RDSP. Credit unions, you might be able to work with them directly there, but they usually have to go through a third-party investment company where the RDSP is actually held. Independent financial services companies, oftentimes those representatives can come directly to your home, might be able to set up a video call to go through that. For the RDSP, they do require physical signatures on the document, so you can't e-sign everything to do with that. So usually there is that in-person component, or printing and mailing those documents and getting them sent back. As well, just what accessibility options do they have? Can you access the account information online, or do you always have to go through your financial professional or institution? Do they provide interpretation if you're somebody who requires a language support in a language other than English and French? Will they be able to send you emails and written information if you're somebody who's hard of hearing? So the considerations that you have for where to open it up with is really going to be different for everybody. If you're really stuck on kind of where to go, my suggestion would be to look at your trusted family members, friends, and colleagues and ask them where they have their investments and see if you can get some good recommendations. As well, one of the resources that you'll get is a questions list that can kind of help you do your research and figure out where you want to go to open your RDSP. If you open your RDSP and you're not happy with how it's being managed, you can also transfer it down the road. Only thing to say here about this is just please make sure you book an appointment to open your RDSP before going in. It's quite rare that you would be able to just walk into a financial institution and open it up right there. Usually appointments are 30 to 60 minutes long because they have to go through your entire financial picture and make sure that they understand your goals of the account and that you understand everything with the account. So it's not a short appointment. So make sure that you're booking that time and have it scheduled in advance. Otherwise, you might be ending up wasting some of your time, and that can be really frustrating. Okay, all right. So now switching gears to talk about the grants and the bonds. So again, this is that money that's coming in from the government. So ASL interpreters, so we've got some numbers coming up. I'll do my best to try to be clear about that. So with the grants and bonds, that's that government money that's coming in. Eligibility for these is based on adjusted net family income. Now, outside of it being adjusted net family income, it is also based on somebody's family income 2 years prior. Now, this kind of makes sense when you think about it, because I don't know how much money I'm making this year, so the government doesn't know how much money I'm making this year. And when this year has started, we haven't yet filed our income taxes for last year. We're doing that, usually around March and April. And so at the beginning of the year, it is January, or it's 2 years prior income tax returns that are the most readily available tax data that the government has. So for example, if you're opening up an RDSP in 2024, the income thresholds that I'm going to explain are the income thresholds that your 2022 income tax returns are going to be compared to. So just keep that in mind and bear with me as I get through the thresholds here. As well, just briefly, for a beneficiary who is in the year that they turn 18 and under, everywhere in Canada, this is regardless of age of majority. So for a beneficiary who is in the year they turn 18 and under, it's going to be based on their parents' or guardians' adjusted net family income. Once that beneficiary is in the calendar year that they turn 19, even if they are not the holder of their RDSP, the grant and bond income thresholds will be based on their adjusted family net income, which would be their income plus the income of a spouse or common law partner. But it's still going to go 2 years back. So if you are a parent or guardian of a child beneficiary, you're definitely going to need to make sure that their income taxes have been filed for the year they turn 17 and the year they turn 18, even if there is no money to report. And that's because if there is no income tax for the government to reference, they're going to assume that that person is a high income earner. They're going to get no amount of the bond, and they're only going to get the lowest matching grant. So sometimes parents will call in and say, oh, I've opened the account, I've put some money in, but I've only got $1,000 in grants and there's nothing else. I don't understand, because the income taxes weren't filed. And it's actually beneficial to file income taxes earlier because So the bonds, which are most beneficial for people who are low to medium income, these are the freest contributions because they require no personal deposits. Somebody could open the RDSP, deposit $0 into the account, and still receive up to $1,000 per year for a total of up to $20,000 up until the end of the year that they turn 49. I've put the thresholds on screen here, but really for 2024, so again, your 2022 tax returns, if the family income was at or below about $36,000, they would receive automatically that full $1,000. If their family income is between that and about $55,000, they'll receive a portion of that bond, but it'll lessen the higher the income is. So it's on what we call a prorated basis. And for most people, it does take a full 20 years, but because these are automatic, when you open the RDSP, the bonds will automatically be deposited. And then every single year in February or March, you'll automatically get your bond put into the account as long as everything else remains valid for the plan. The grants, on the other hand, that has a much higher income threshold because it does require personal contributions in order to receive. So really how this works is that if your family income is at or below about $111,000, then you deposit $1,500, which is $125 per month. And then the government will deposit $3,500. They do that because they match the first $500 that you deposit at 300% and the next $1,000 you deposit at 200%. So that's how the matching works for those grants. Again, if your family income is above that threshold or you have no income tax filed, you can still get some grant, but you'll only get $1,000 on the first $1,000 that you deposit, and that would be your maximum for that year. So really important to file income taxes if you're below that threshold. Now as well, just want to mention that because a disability tax credit can be approved and applied to your taxes up to 10 years in the past, you can also collect retroactive grants and bonds. So really these are grants and bonds that you would have been entitled to receive during those years, but because you didn't have an RDSP, you couldn't get them. But no worries, as long as the beneficiary is in the year they turn 40 and under, especially if they've got that full, 10 years of DTC back approval, then they can still receive the full amount of the grants and bonds. It's a little bit complicated how they factor in the grant ratio. I mean, bonds are easy because those don't require personal contributions. You'll automatically be caught up on all of those that you were owed in about 4 months of opening the account and then getting them regularly every year. The grants, it's restricted to $10,500 per year. Truly the easiest way to know how much money to deposit to get the maximum grant is that every February, March, Employment Social Development Canada, they're the government branch that oversees the RDSP and provides those grants and bonds. They'll provide a statement of entitlement, and this will tell you how much to deposit to get the maximum. You can also, once your RDSP account is open and you have your RDSP account number, you can also call in to ESDC anytime, and they can give you that information over the phone as well. Of course, these also end December 31st of the year the beneficiary turns 49, even if there was retroactive amounts to catch up on. So again, really just starting early is key. I've also put on screen here the historic income thresholds, just in case you're curious. I'm not going to read all of those numbers out, but really what we can look at is the first column is the year. The phase out income, that's the income level used where if you're at or below that, you get 100% of the bond, so that full $1,000. The third column is what the government calls the first threshold. So this is the last income threshold that you can have to receive a portion of that bond. And then the final column, that's the grant threshold. So really that's just if you're at or below will depend on whether you get up to $3,500 per year or $1,000 per year. So we're almost finished now. I'm not leaving as much time as I hope for questions, but hopefully I've answered a lot and I'm happy to connect with you offline afterwards as well. So I just want to briefly touch on withdrawals. This is definitely one of the most complicated aspects of the RDSP. Really, main messages is that it is a long-term savings plan. For most people, depending on their age, it is a 30+ year savings plan, and emergency withdrawals are restricted. We do have our RDSP Level 2 webinar through Plan Institute, which we are, I'm so excited to say, redoing the video for. So probably I think this April or May, we'll have a brand new webinar video that talks about withdrawals in a lot more depth and with a lot more examples in there. So that's important. And something that could be helpful as well. But really the biggest thing to keep in mind about withdrawals is that there is something called the 10-year or proportional repayment rule. What this means is that if any government grants and bonds have been deposited into the RDSP in the last 10 years, so since February 27th, 2014, that was 10 years ago, oh my gosh. If any grants or bonds were deposited in that time, then any withdrawal today from the RDSP would cause a repayment of those grants and bonds, starting with the oldest grants and bonds first, at a rate of $3 for every $1 you take out. So it is a very steep penalty. Just to give you an example of that. So you take out $1,000, the government takes back up to $3,000 for a total of $4,000 gone from your RDSP. Once those grants and bonds have been repaid, you are no longer eligible to receive those again. So your new lifetime maximum would actually be reduced because even if you're young enough, like let's say you have to repay some of those in your 20s, you are not going to be eligible to get those back down the road because you've already received that and paid it back. So it doesn't reset that amount for you, unfortunately. Just like with the personal contributions limit, that lifetime maximum up until the end of the year you turn 59 is $200,000. And so if you, withdraw some of your money, that is then reduced by that amount. So you no longer can deposit up to that because you've already deposited and taken it out. As well, the only other thing is that if you can deposit more money than the government, even by $1, it changes the status of your plan and makes withdrawals much more flexible, and you have a lot more control over those. So I won't touch on that further now, but I'm happy to support folks with questions about that after. As well, I'm not going to touch on this in much detail either, but if somebody has shortened life expectancy, so this would be when a medical practitioner certifies that the beneficiary has 5 years or less to live, then you can change the RDSP and have a lot more freedom with those withdrawals. There's also no consequence if you live past those 5 years, like especially if there was a new treatment that came out and actually your life expectancy was brought back up. It can also be reverted anytime. So at any time you can change it back to an RDSP, but these are the only types of withdrawals that can avoid that 10-year rule. And what some folks also may be wondering is what happens if you lose your disability tax credit approval. This could be, especially knowing that folks have to reapply often every 5 or 10 years. What happens if you can't get it renewed? Oftentimes, this isn't because you're no longer disabled. It could be because you have lost access to a medical practitioner. I think that's probably the #1 barrier that folks experience, or they don't have the money to be able to pay for the form to be completed. So anyways, if that happens, and potentially maybe you did recover and you no longer are disabled and qualify. So if that's the case, your RDSP can remain open. You could close it and then just repay any grants and bonds that were received in the last 10 years. But really just quickly on this, if you lose the DTC, the RDSP is basically frozen, and that 10-year countdown stops the first year that you are DTC ineligible. So if you have your RDSP open, it's 2024, but 2025, I don't have my DTC, I can't get it renewed. Then instead of how it normally would work, where 2034 would be 10 years, and if no grants and bonds were received in that time, no problem, you can take out your money. But if you don't have the DTC, it would actually be 0 years that have passed. So really important, if at all possible, to reapply for the DTC and get that approval, because as soon as you're approved again, it just goes back to function normally. And if your DTC approval goes back to the years that you didn't have the DTC, then you could actually get grants and bonds for those years, as long as you're under the age or still in the year that you turn 49 or under. And taxation, not going to touch on this too much, but basically, while the money is in the RDSP, it's not taxed. When you take money out, only the amount of money that's taken from grants, bonds, investment income, and proceeds from a rolled over amount will be taxed. All personal contributions are considered after tax dollars, so you'll never be taxed on that again. And unless you're withdrawing about $24,000 in just the taxable portion, no tax will be withheld at source. This would be considered taxable income if it is those other categories that I mentioned, not your personal contributions. There's a slight chance you might have to pay tax on that, but usually it's quite low. And I haven't heard of a massive tax hit that people have had with these, unless they're taking a really, really large withdrawal. So as well, it's important because while the DTC and RDSP are great programs and can provide a lot of short-term and long-term relief and financial empowerment, they're just one aspect of financial well-being. So good to consider other options that you have, things like income assistance programs, looking at a registered education savings plan, non-registered savings accounts, trusts as well, possibly a tax-free savings account. You'll just want to double check if you're receiving benefits from an income assistance program of some kind, how they treat other assets like those, because RDSP is really the only one that's almost fully exempt, whereas these other ones can be treated a bit differently. So just want to make sure you double check on that. So I've talked a lot, and I'm just going to share some resources, and I think we've got time for a few questions. And again, really happy to connect with you after directly. I've got our helpline information again on screen there. We also have rdsp.com. This has a great calculator where you can see how much money your RDSP might be worth, as well looking at our RDSP tutorial. If you or someone you're supporting is in BC, you could get a one-time $150 grant for BC residents. And we do also have our RDSP webinars that we offer regularly. And I am really excited to share this information. I encourage you and request that you share this information far and wide, but we have been successful in getting our RDSP Level 1 webinar, which is a lot of the information I've covered here today, but a little bit less detailed. We have had that interpreted, or are in the process of doing that, and we'll be launching these brand new interpreted webinars with a 1-hour question and answer period starting in March. So we'll be having Arabic on March 19th, Mandarin and Simplified Chinese on March 20th, Spanish on March 25th, and Punjabi on March 26th. You can register by going to planinstitute.ca. You can, on screen, it's registered-disability-savings-plan. But also if you just go to our website under, I think, learning or workshops and events, the RDSP section will have those there to register. The registration pages have been translated, so they are in each of those languages, as well as the survey and the custom resource that will be shared afterwards. I know that for a lot of you folks who are tuning in from the East, those times may not work for you because it would be quite late, but they will be recorded. So even if you register, you'll get a link to that recording afterwards, and we will be hosting these in the future in other time zones. But this is what we're starting with and really excited to launch next month. As well, there's a disability benefits compass tool. This is an online tool that can go through all the top 4 disability benefits in all provinces and territories. It also links to a non-disability specific benefit wayfinder, so that anyone and everyone, all of you that are on the call today, you can go through and figure out what benefits you might be eligible for but haven't received. So again, our helpline information. I thank you all so much for listening and paying attention to that long presentation. It's been a pleasure, and if we have time, I'd love to get through a few questions.
Hi, Liz. So, because we are short of time, we are only having 7 minutes. We can use the Q&A, and we have a few questions in the chat.
11.
Perfect. All right, so I will just open that there. Okay, so I'll answer these probably a little bit quickly, but feel free. I'm going to leave the helpline information on screen so you can jot that down and reach out afterwards. I'm the person who's currently managing that email. So if you email there, you'll get to me directly, and I usually will respond by the end of the week. So who is a family member? So that I think is to do with the disability tax credit. So a family member would be somebody who is, for example, a child, grandparent, could be a spouse or an aunt, an uncle, a cousin, really any family member that you have who provides you with regular food, shelter, and clothing. Oftentimes they live together with the person who's applying, but that's not necessarily required. Okay, next question we have here. I am working with newcomers who do not have any family doctor. Can they go to walk-in clinics and ask their docs to fill out the application for them? That's a really good question. Thanks for asking that. So yes, most of the time medical practitioners will require that they see you a few times before they'll be comfortable filling out that form, because they have to verify that information and make sure they have a good understanding of your health history to do that. Some walk-in doctors will flat out refuse to do it, but that's not true of all. Like my cousins, one of them has 2 kids that are both autistic. And so for each of them, they actually just went to the same walk-in doctor who said, just bring me a pre-filled form. I'll review it with you and I'll sign off on it. So definitely ask, because it is possible. As long as they have the right medical certification, then they can fill out the form. Next question we have here is, do you apply for the DTC before filing taxes or after? That's a good question. And truthfully, it doesn't really matter whether you're doing it before or after, because it takes up to 4 months, sometimes a little bit longer if there's like a follow-up questionnaire that's being sent. You know, generally, like if you were to apply now, you probably wouldn't be approved before you can file taxes for 2023. However, if you've already filed your taxes for those years, no problem. On the application form, you can check a box that says, if I'm approved, I consent to the CRA reassessing my taxes for all applicable years and applying that tax credit. Alternatively, you can work with an accountant. I'm lucky to have my dad as my accountant. So he just went in. You can do up to 4 years of reassessments online. And otherwise, for the previous years, you have to fill out a T1 adjustment form if you don't check off that box. And so that would then factor in to those previous tax years. Ooh, good question here that we have here about how much money would somebody receive every month. I'm guessing this was to do with the RDSP. So mandatory withdrawals from the RDSP have to start no later than the end of the calendar year the beneficiary turns 60. The amount that somebody can receive is going to vary. There's 2 different types of withdrawals, but the regular kind of like pension payment plan that the RDSP offers has a formula that usually pays out by the age of 83. Once you start getting payments, let's say just for sake of this example, but it can start earlier at age 60. At that point, you can basically look to see, okay, how many years do I have left until age 83, and divide the total money of your RDSP by that. So for example, I'm just going to choose easy numbers here. Let's say at age 60, you have $230,000 in your RDSP. You've got 23 years until age 83. So at that point, you take $230,000, divide that by 23 years, you could receive about $10,000 that year. Again, if you deposited more money than the government, you could actually just withdraw all the money in your RDSP. So even if it's a smaller amount, you have more freedom with that. Our RDSP calculator is a great tool to kind of look to see what you might be able to expect based on your personal situation and how much you can deposit and your age, but it does vary pretty much for everyone. Question about, will the recording be shared later? Yes, it is being recorded and will be shared with folks. Someone's asking here, whether once they open an RDSP account, if they have to inform the CRA, and the answer is no, because the CRA will already know. So when you're filling out the application forms at the financial institution, one of the forms is an application for the grant and bond. You have to either say, yes, I want to receive these, or no, I refuse those. Whichever one you choose, that goes to Employment Social Development Canada, and you're consenting to them getting your tax information from CRA to determine that. So no, there's no need to notify them directly. So I think that's pretty much time for the questions. I know there's still some questions that we have here that I wasn't able to get to, but please feel free to send me an email, give a phone call to our line, and we'll make sure to connect you with an advisor, whether it's myself or one of our team members, to make sure that we can get those answered for you. So I think that's it then. Tekla, do you have any closing words? I mean, I just want to thank everybody so much for tuning in. I know this was a lot of information and, you know, might be a little bit tough to wrap your head around, but you'll get a copy of the recording, presentation, other helpful handouts as well. And we're here to support you anytime throughout your journey. So just, you know, thank you. And I hope you have a great rest of your day. Any closing words from you, Tekla?
Yeah, thank you so much, Liz, for the enlightening presentation. And just to say, we will share out the presentation on the Zoom recording, maybe sometime next week, because we need to sort it out. So before you leave, please take time to fill out the polls that I'm going to launch right now. After you finish the poll, just feel free to log off.
All right, well, I've got to get to another webinar myself, but thank you so much for having me. I look forward to the poll results and have a wonderful day, everyone. Take care and bye for now.